Well, mining giant BHP's full-year profit has fallen 4% to $11 billion. This includes a $1.5 billion provision, which is related to BHP's shift towards renewables, the Samarco dam disaster in Brazil and COVID-related costs of $470 million. Business editor Ticky Fullerton sat down with BHP CEO Mike Henry.
I think this is a very strong set of results. And of course, the fact that they were achieved in the face of COVID makes them all the more special. You look at the underlying cash flow metrics, $8.1 billion in free cash flow for the period, return on capital employed of 17%, 72% payout ratio on the dividend, 55 US cents, 120 cents for the full year. And it's the third year running that we've returned over $6 billion to shareholders in ordinary dividends. So that's a pretty solid set of results, even more so given some of the challenges that the world has faced over the past 6 months.
One of the good things that's happened, of course, is that the iron ore price continues to defy gravity. The government's got it in there, the Treasury's got it in there at $55 a tonne by Christmas. What are your expectations of it?
You're right. Iron ore price holding up has certainly helped the results, but I do want to focus on the underlying operational results as well, where we've hit records at a number of our operations. We were safer, lower cost and more reliable for the year. All of that then helped, of course, by the portfolio and iron ore prices. As to what the future holds, look, we see the next year as holding a lot of uncertainty, stating the obvious. We do anticipate that as we see more volume coming out from some of our competitors, including across in Brazil, that we could see a little bit of retracement in iron ore prices. But at the end of the day, we've got a diversified portfolio. We've seen the strength of that portfolio in the past 6 months. So in spite of all of this uncertainty, even if we see a bit of pulling back of iron ore prices, we're very well placed to see through the next year.
Right. Now, since you had your media conference this morning, there has been a development on the China side. And of course, your main customers, iron ore customers, are China. The Commerce Ministry has announced an anti-dumping probe into Australia's $1.1 billion wine export industry, Mike. I mean, the trade trade tensions seem to be escalating. Are you worried that it's going to reach mining?
Ticky, let me answer this in two parts. So in terms of the relationship that we have with our customers and suppliers in China, they remain strong. And even through the depths of their own COVID response, our customers there were doing everything they could to meet their commitments to us, and many of them went the extra mile. So our relationship with customers and suppliers remains strong. We're continuing to move all of our product. On the broader issue of trade tensions, not just Australia and China, we see global, we're in a period in which there is global trade tension. We've been strong advocates. We're on the record as being strong advocates for free trade. We believe that leads to prosperity, and through that prosperity that we have the greatest chance of regional and national security, and we continue to be of that view, and we'll continue to advocate for it.
But at this stage, I mean, we've got our respective trade ministers not talking to each other at all. Really, it's the mining sector that seems to have the strongest relationship with China. Can that help, do you think?
Well, so I think you're right. The mining relationship between companies like ourselves and our customers and suppliers in China is strong, and that provides a great foundation. I don't want to comment on the tensions between Australia and China, other than to say that I think, certainly from our perspective and everything that we can see, the bilateral relationship is held as important by both parties, and I think you see that shining through in terms of the continued strong relationships that we and others in the mining industry have with our Chinese counterparts.
Yeah, and you're going to continue to have China as your major customer going forward. I mean, you're not looking to dramatically change your export portfolio there, are you, on the customer front?
I think the reality is that given the strength in the Chinese economy, the recovery that's underway there, and the healthy demand for our products, yes, we'll continue to have a significant proportion of our sales to China. But we do expect over time, of course, that other companies will move through COVID, will recover, and we'll see economic growth in other countries, India and elsewhere. And of course, we're very well positioned to be able to supply growing demand in those economies as well.
Mike, a big part of your results was this announcement around sort of decarbonisation, two new positions, but also the decision to part with thermal coal. How long is that going to take, and who would buy it?
So on thermal coal, we're looking at about 2 years to complete that. Now, part of the reason for that, Ticky, is that we want to explore all alternatives to be able to divest BMC, which is a couple of coke and coal assets in Queensland, but not quite the higher quality coke and coal that we've said is core for us going forward. So we're divesting of BMC, New South Wales Energy Coal, and Cerrejón, which is we have a non-operated stake in the Cerrejón operation in Colombia. Now, as to how we go about doing that, it could either be via trade sale for value. We've raised the possible alternative of a demerger. We want to spend the next period of time exploring those different alternatives, engaging prospective buyers, engaging our shareholders, and we will land on the right decision that maximizes value for BHP shareholders. And we'll take our time to do that.
Right. Now, obviously, your major competitor, Rio, has had great difficulty after the Juukan Gorge disaster, but equally in the upcoming AGM for BHP, there will be pressure. I know there's pressure for a potential moratorium on heritage sites until legislation is passed. How are you going to respond to this?
If we look through to the resolution that you're referring to, it appears to be coming from the perspective of wanting to ensure that there's not another Juukan Gorge, and we agree. We also believe, however, that we have a long track record and history of deep, respectful engagement with traditional owners that's based upon mutual respect and understanding. We already operate at a standard that is much higher than existing legislation. And in fact, we've been advocates for changes to legislation well before Juukan Gorge. We've been advocating for a stronger position, rights for traditional owners in determining the approach to their own heritage. And we'll continue to focus on that. We'll continue to engage with the traditional owners of the land on which we're mining. And we will seek to understand the perspectives of all parties, including the proponents of the resolution. And our board will in due course decide how to proceed with our recommendation in respect of the resolution.
Last couple. Obviously, your COVID costs are up like all companies, but this hard border with Western Australia, to what extent, you were talking on the call about potential for wage inflation, but it must have been very difficult. How long do you think, for your workers that needed to get in and out, how long do you think the border is going to stay closed?
It's hard to predict, Ticky. I think the border will stay closed as long as it needs to stay closed, and we've been very supportive of state governments, including in WA, taking the actions that need to be taken to protect the population and, frankly, at the end of the day, to protect the industry as well, because the industry keeping safely going is in everyone's interests. It has been hard on some of our employees. On the one hand, our employees have stepped up in quite a remarkable way, but we know that many of them have had to sacrifice in order to be able to do that. And we're doing everything that we can to support their mental wellness and to recognize them. Now, I will just say that in spite of the incremental COVID costs that you referenced, we have managed to continue to bring costs down. So not only have our employees stepped up to keep the business safely running, they've stepped up to make us more reliable and more productive as well. And on the balance of that has been a lowering of unit costs in iron ore and actually across all of our major assets in the year past. And that's quite a feat.
Business editor Ticky Fullerton joins me now live. Ticky, Mike Henry, from the sounds of things there, might fancy himself as a bit of a diplomat.
Look, he's a consummate performer, isn't he, on air, Mike Henry? I think, look, these results have been, I think they're conservative because looking forward, when he was asked this morning, actually, was the dividend a bit mean? I think their response was no, but we can change this every 6 months, and with an uncertain outlook, we think it's appropriate. And I think it's not a bad dividend. Very interesting to hear what he had to say about China and the importance of those relationships. I mean, this news that's come through today about the hitting our wine industry, about the Chinese Ministry of Commerce now looking at an anti-dumping probe. Well, Treasury wine estates have fallen 15% today, which is, I mean, these are they've got prestige brands like Penfolds, but they're very big into China. This is a big hit, and it'll be very interesting to keep an eye on the dairy industry because they've also got a lot invested in China. Elsewhere on the markets today, we had a third quarter report from trading update from Westpac, and the interesting thing there was that they did decide to cancel their interim dividend. Remember, it was deferred earlier, but they've actually decided to cancel it. Westpac shares down 2.4. I should add BHP's just off 0.5%. So, yeah, and a slew of other results, Cochlear, Amcor, so quite a few reporting today.
Coles was, well, initially they couldn't sell enough during the lockdown, but results came in today. Ticky, did this last?
Well, that's it. Yeah, interesting. I mean, they are an essential service, and their store sales on same sales were up 7.1%. I mean, the overall drop in statutory net profit was 31.8%, but that's largely part of this parting ways with Wesfarmers because there was a lot of sort of Kmart Target office works in the Coles accounts. Coles share price actually fell 1.4%, but they did lift the dividend by 15%, which is nice for shareholders. Obviously, they've got higher sales at the supermarkets, but then they've got these costs with COVID and social distancing and whatnot. And look, here's what Steve Kane had to say about how life has been in the year through COVID and indeed all the way up to the Melbourne shutdown.
The main thing is that we've managed to get through COVID relatively successfully. We've managed to support communities, our suppliers, our team members through, well, not only COVID, but the droughts and the bushfires. We've successfully implemented our strategy and we've grown our group profits for the first time in 4 years. So as we hit COVID, Coles was performing very well at the time. What we then saw was March was the panic buying peak, as we know. And then obviously what we saw is a very subdued Easter, but then a steady build beyond that through to the end of the financial year. And then what we've seen from the stage 4 lockdowns in Victoria is elevated demand in that state and closely followed by what's going on in New South Wales.
Yep, so that was Coles, Tom. Overall, the market finished up 0.8% today. We've got an absolute slew of results tomorrow. A third quarter update from ANZ, and then we've got Bramble and Crown and CSL and Tabcorp and A2 Milk amongst others. So look forward to that.